Let's see how we fill up the short-term capital gains on sale of equity shares or equity-oriented mutual fund which are taxable as per 111A. In order to identify whether the mutual fund you sold is an equity-oriented mutual fund or not, you can check the transaction statement. In case the securities transaction tax is charged, that is the STT is charged on the sale of mutual fund, then such mutual fund is an equity-oriented mutual fund. This is how you identify it. Further, in case you have short-term capital gains from sale of equity shares or equity-oriented mutual fund, but do not have a business income, then in such a case, you can file ITR-2. However, apart from the short-term capital gains on sale of these shares and mutual funds, you also have a business income, then you should file ITR-3. Now the profits in case of sale of equity shares or equity-oriented mutual funds will be calculated in two different parts. The first part being where the shares or the mutual funds have been sold before the 23rd of July 2024, and the second one is where it is sold on or after the 23rd of July 2024. The reason why we need to calculate it separately is because the tax rates have changed from the 23rd of July 2024. Since the tax rates have changed, the profits will be calculated and reported separately. Now, what are the details that are required? Let's see in this example of ours. The sales value of equity shares and equity-oriented mutual funds summed up together, and then the purchase price again summed up together, and then the transaction charges on contract notes. Please note the sales value and the purchase value of the shares and the mutual fund have been summed up together as because they will be reported the same way in the income tax return. In the similar way, we'll also calculate these values for the shares and mutual funds that have been sold on or after the 23rd of July 2024. Now, before we move on to the return filing utility, let me tell you this thing. In case the listed equity shares or the equity-oriented mutual fund are sold within 12 months from the date of its purchase, then the profits or loss arising from such sale would be treated as short-term capital gains. Now, let's move on to the income tax return filing offline utility. Once you open the Excel-based offline utility, the first thing that you need to do is fill in the Part A of the general schedule, which is this one. It contains the personal details of the taxpayer, such as name, PAN number, contact details, bank details, as well as the option to choose from the old tax regime or the new tax regime. Once you fill in these details, you then need to fill in the capital gains schedule, which is this one. Under the capital gains schedule, look for serial number A, subroman 1, and scroll down a little bit. Under serial number 2, you will find a section where you can fill the short-term capital gains arising from the sale of equity shares or equity-oriented mutual fund on which STT has been paid. Now we need to start filling in these details. Scroll a little to the right. Now where the equity shares or the equity-oriented mutual fund has been sold before the 23rd of July 2024, the details with respect to the same will have to be mentioned in this column. And in case it's sold after the 23rd of July, the details will have to be mentioned in this column. So let's start filling up the details. Let's first fill in the details for equity shares or mutual funds sold before 23rd of July. Now once this is filled, we move on to the next column. That is equity shares or mutual funds that have been sold after the 23rd of July 2024. Let's start filling up this one now. Once you fill in both these columns, it automatically calculates the short-term capital gain on equity shares and mutual funds. So this is how you show the short-term capital gain on equity shares on mutual funds that are equity oriented on which STT has been paid.